When you patch up the boat by having a strategy for hedging against inflation, and then you execute, you get further ahead
Yeah,
from a wealth perspective.
it pushes you forward.
That's
It
right. And
does.
the reason to be further ahead is not so you can subtle flex, but it's actually so you have more security, more
Yeah.
mental freedom, more peace of mind, right? And so what we're all actually seeking is that freedom. We're
Yeah.
all seeking the ability to do what we want, when we want, with whoever we want. And oftentimes the tool to do that is money.
Welcome to the Disruptance Podcast. Here are your hosts, Eric Forney and Michael Bounds.
Mike, every week on the show, we aim to disrupt the way real estate agents and entrepreneurs think about their life and business. And this week, I want to disrupt the way you think about the current market. And by that, I mean, well, everything. And so the question I have for you is, are we in an everything bubble right now? And is this thing going to pop and crash quickly?
Well, I don't know if I'm the right person to answer this because I'll give you an answer. I'm going to say no. I'm going to say that where we are is where we're supposed to be. I feel like for a while there, our prices kind of went up really slow, and I feel like this is kind of where we're supposed to be. We have we can get all into that. So, what do you think?
Yeah.
What's your thought about that?
Yeah, you know what? I'm with you. I think that when we look at the trending data, interestingly enough, searches for housing market collapse 2021 are up 2,400% in the last 12 months. And so the world wants to know if we're on the precipice of a housing market collapse. And because real estate is what we know and do, operating real estate businesses and operating businesses in general, I think it makes sense for us to start there and look at. I know this is a conversation that we've talked about. The reality, though, is just based on the way that the data from Google, people want to know is what is the value of their net worth and the value of real estate going to look like. And so when we dive into that, I'm 100% in alignment with you, Mike, when we say no, the real estate market is not in a bubble. And no, we are not going to have that bubble burst quickly or anytime soon when it comes to the real estate market itself. And so there are so many other factors at play that are influencing the real estate market that make me have all the confidence in the world right now that we are not in an everything bubble or in a real estate bubble, especially.
Yeah, if you look over the last 10 years, we've built less homes in the last 10 years. I can 12ish, we had a huge builder here in Indianapolis that would bang out, I don't know, 28, 3,200 homes per year, that one builder. A couple years ago, our combined builders were doing about that. We're doing more than that now. But for 10 years, that builder was out of business. And that builder was providing inventory. The problem that we have now with past bubbles, we didn't have an inventory shortage problem. Right now, the problem is there's not enough houses and there's more people out there looking for houses. So unless you fix that, I don't really know how there would be a bubble to pop. Does that make sense?
Absolutely makes sense. The only thing then that I look at and say the only reason that a real estate bubble pops is because there's an everything bubble, right? We actually see the economic collapse that we expected to see in April of 2020. And based on all the data that I'm looking at on a regular basis, there's no reason to believe that real estate starts the next global recession the way it did in 2008 because of precisely what you said, Mike, which is a significant shortage of inventory. In fact, when I was looking at investing into real estate and really starting to learn more about buy and hold investing, what I was looking at was where do I see the migration pattern? Where do I see the migration pattern of the population growth into population needs? And is there housing that accommodates the highest level of demand today and in the future? And when I really went down this rabbit hole, what I realized was that single level, single family homes, so one story, single family homes, would be in the biggest demand in the late to mid-teens of 2000s, and then you know arguably for the next 20 to 30 years we may see a significant shortage in one level homes, um, because of the population dynamics that we're looking at, which is boomers and millennials and soon to be Gen Z, all converging for uh, the same inventory, which is affordable inventory. Boomers, of course, without stairs and without the need to deal with physical ailments. Millennials and Gen Z potentially because right now they're the poorest generation that we've seen since the boomers. And
Yeah.
so when you converge on this one product,
And
we see a
investors.
massive shortage. Yeah, plus
And,
that,
and
absolutely.
plus the investors are also in that loop. They've gone up as we've discussed they're up ten
Yeah,
percent in their so all those three people are fighting for the exact same spot, or those three avatars, those three groups of people are fighting for the same space. So that's where the pool is. So how do you get out of that?
yeah. Yeah, it's interesting because I'm a huge nerd. I spent a significant amount of time a couple weekends ago watching and researching. Harvard actually has a real estate program, and they do a significant amount of research and put out reports and data on affordable housing shortages. And the estimate from Harvard is that we're looking at a 2.5 million house shortage, with no actual answer for how to solve this problem. Because do we solve it by building more houses? Well, it takes so much time to ramp up production of
Two and a
houses.
half million, then you're round. I mean, how much is built up from that?
Yeah. So do we solve it by implementing rent control? Well, that hasn't worked effectively for California. In fact, historically, the data around rent control is that it actually doesn't benefit um, homeowners and renters the way that it's anticipated that it would. Do we do this by universal basic income? What is the answer to solve the real estate crisis? And the reality is that it's such a complex problem that is multifaceted because housing is not just a commodity. This is the thing that I wish that everyone fully understood. And you know what? I guess the beauty of it is that we wouldn't have jobs if everyone fully understood the multifaceted complexity of real estate and housing. And that's because real estate is both an asset and a commodity and a social service. It's a social service because it provides shelter, it provides somewhere to have security and to feel comfort and to have certainty. And by the same token, it's a commodity because it's made up of several commodities and combined into one asset. It makes up the largest storehold of wealth for the middle class. And so there are all these components that converge that impact real estate prices, and the fix is not nearly as simple as what we would think from the outside looking in. And so, barring an everything bubble, the value of real estate assets from a single family perspective continues to go up, and is well hedged against the impending market of inflation.
Yeah, so I mean that's what a lot of people are talking about, inflation. I noticed I went to Subway the other day, and it's not a $5
They
foot
don't have
long
that $5
anymore.
foot long?
They
No,
don't. It was $25 for 2 foot longs. So, like, I mean,
that's
or do
probably
we
true.
do we have an inflation issue? Do you think that? I mean, what I'm seeing, everything that I'm reading, I read a lot. I'm reading that everything is short term.
Yeah.
It's meant as a correction because everybody's coming out right now, so the demand is really high. So then that's making prices jump up. What do you see?
I mean, I guess I'll be the first to go on record and say that I was pretty demonstrative
Yeah,
and convicted of what I thought that things would look like today, and I was almost dead wrong on everything that I anticipated. And the reason why is because I did not anticipate seeing monetary printing and stimulus like what we've seen in the last 14 months. Right? There are estimates between 20 and 40% of the total number of dollars ever created were printed in the last 14 months. And so that wasn't part of the economic equation that was anticipated for. And so that's the wild card is so long as the government continues to print money, well, by definition, there has to be inflation, and the inflation has to be greater than what Jerome Powell is telling us at the Federal Reserve of 4%, right? So recently, the Fed came out and said that the quarterly inflation was 2 times the preferred rate, and yet the reality is that the printing is exponentially greater than that. And so I think it helps to understand what inflation is in order for us to fully like grasp the concept of money and of bubbles in general. Because I think that we all have the, at least I know I've been guilty of this, is we have this belief around what money is. And it's not until you go down this rabbit hole of really questioning everything that you think you know about money that you start to realize that you know almost nothing about really what money actually is. And so when I think about when you think about money or currency in general, it really is it's that promise exchange of trust. It's that I'm giving you a dollar and that dollar is worth to me what it is worth to you in exchange for some good or service in exchange, right? And so um, when we print more, when we inflate the supply of promises, in theory, the number of promises that we have in our bank account becomes worth less by pure definition alone, right?
Right.
And and so it's foolish to think that we're not experiencing inflation from a supply perspective. So there's supply side inflation, but then there's demand side inflation, right? Like the price of lumber supposedly is supply and demand constrained inflation. So the price of lumber gets inflated due to shortage of supply and an increase in demand. And so we see that price being inflated, and then there's expense or cost run, where perfect example of this would be if all of a sudden the prices of TVs shot way up, or in this case, the price of vehicles has gone way up
Yeah.
because there's a shortage of chips, right? So there's a shortage, therefore there's an increased cost to manufacture the vehicle, which causes the price to inflate. So we have supply and demand pressure, and then we have cost or expense constraints that drive up or drive down prices. And so we're seeing this huge surge of inflation, yet it's not showing up in the numbers. It's only being reported that we saw a 2% increase year over year from the preferred rate inflation wise, and yet real estate prices tell a totally different story. The stock market tells a totally different story than that. And so the question then is what is reality? What
Yeah.
is true? Like, are we seeing inflation, or is it actually just slightly increased business as usual?
I don't know. I mean, if you think about, like, look at house pricing. Look at what houses have done in the last 5 years, right?
Yeah,
So is that because our dollar is not worth $1 anymore? Is it not worth 80 cents? So it feels like, yeah, I just paid $300,000 for this house that was 250, but in all reality, you're paying the same amount. It's just because your dollar's not worth as much.
correct. And so that's the hard part for people to grasp, right? This is the biggest thing that holds real estate agents and potentially interested real estate buyers and sellers, that holds them back from being able to move forward and either be successful if they're a real estate agent on how to advise their clients, or be successful if they're an aspiring real estate investor is. And it's the concept of historical based pricing or historical based monetary equivalent. Um, you've used the example so many times, Michael, that says, if you could go back in 1990 and buy Apple stock for
Hmm.
$10, you would be an idiot not to do that, right?
Right.
And yet the reality is that Apple stock is not $10 anymore. clinging to the idea that you can buy Apple stock for $10 or that it should be worth $10 because one day it was, doesn't serve you.
Right.
It does not serve you. And yet we see people do this over and over and over with real estate. And so what I want to challenge people on is to understand that money is and wealth is a measure of comparison. Because if it's not a measure of comparison, why is it that we don't feel like in the middle or upper middle class that we're getting ahead? Because the reality is for the last 100 years, the upper middle class is way more wealthy in comparison to someone in the 1900s. Yet when compared to the billionaires or the upper 1% of the 1%, that gap is actually widening significantly.
Right.
It's because we don't think about money in a comparison standpoint or wealth from a comparison standpoint. We think about wealth from a security standpoint. And it's when we think about it from that security perspective that it holds us back from investing in real estate. And that's because in order to invest in real estate, we have to understand that prices are comparative market value,
Yeah.
not historical market value. That's what an appraiser does. And in
Yeah.
this market, appraisers serve little to no purpose.
Right.
And I
They just
mean that
get
with
paid.
love, appraisers.
Yeah.
There's,
Well, yeah, because the prices are going up so high, they're looking back when prices are going up. So they're
yeah.
actually acting as anchors, like to kind of like limiting the growth,
And you
if
know
you
what?
will.
In some that's not necessarily a bad thing, right? Is a market sometimes needs that governor system, right? It needs just like your Viper probably had a governor, or you probably had it removed, Mike. There needs to be for safety
Yeah.
of everyone else on the road that governor in place. And so that's how the appraiser really acts, and especially in today's market. The appraised value is not fair market value. The appraisal value right now is governed
Yeah.
market value from a inflation constraint, which is a healthy thing for the actual market itself. It's tough, however, for buyers and sellers to understand, and for a lot of real estate agents as well.
Absolutely. I think just getting being and so when you get that, when you have that guy that says, "Look, I'm just going to wait until this market shifts and where the houses are too high." What do you say to that person?
Yeah, I love that. So let's think about this from a practical standpoint. When we think about, okay, so we know that inflation is, the inflating of currency or the inflationary supply or, rapidly increasing prices. That's great. Thanks. Knowledge without implementation is worthless, right? And so if I'm a listener, or if I'm a real estate agent or if I'm a consumer, what do I do? How do I actually get ahead in this comparative wealth race? Well, to me, I think about it like the sense of we're on a boat, and maybe the boat is the Titanic, right? And the Titanic is supposed to be unsinkable, and so we're in the Titanic, and all of a sudden we get a hole in our boat, or we get multiple holes in the boat. And what we know is that sooner or later we're going to start taking on water. And so, oh shit, now what?
Right.
We have a choice to make. Are we going to try to bail the water out of the boat while we're cruising and increase the speed that we're driving while we're bailing water, or are we going to try to get to land as quickly as possible, get the boat lifted, and get the holes patched and repaired? Are we going to stand still and take on water and actually just sink faster? We have to figure out what's our strategy to get ahead and get to safety. Well, in this case, inflation is the same way. It's like you are the boat, you are the Titanic, and with inflation, you'll start taking on water and sinking if you do nothing. And that's because if you stay in cash, your cash becomes worth less in comparison to market value or into consumer prices. And so doing nothing or remaining in a cash position, hoping that the market will either stay the same or go down, is like doing nothing while you're taking on water in the Titanic. And so I argue that what you really should be doing is just trying to get to land as quickly as possible and start patching your boat in order to be fully prepared to drive as quickly as possible ahead of the danger. And so in order to do that, what I think you do is you go and you buy assets. You buy things that are hedged against inflation that operate from a comparative market value perspective. So things like diamonds or metals, right, where there's a scarcity of supply and a comparative value. Things like playing cards, oddly enough. There's collectibles, right? There's real estate assets. There's waterfront property. There's property on golf courses. Anything that has a scarcity of supply and an increase in comparative value that you can take out debt against in a safe, smart, manageable way that you can take out debt against is a significant hedge against inflation to patch your boat and stop taking on water. And when you patch up the boat by having a strategy for hedging against inflation, and then you execute, you get further ahead
Yeah.
from a wealth perspective.
It pushes you forward.
That's
It
right. And
does.
the reason to be further ahead is not so you can subtle flex, but it's actually so you have more security, more
Yeah.
mental freedom, more peace of mind, right? And so what we're all actually seeking is that freedom. We're
Yeah.
all seeking the ability to do what we want, when we want, with whoever we want. And oftentimes the tool to do that is money. Not that that should be what it is. That's a whole nother philosophical debate. However, in this country, the currency of freedom oftentimes is money. And
Yeah.
so the way to do that is by hedging against inflation with assets. And what a better way to do that than real estate? But if it's not real estate, go buy the 54% decline in Bitcoin yesterday.
Yeah.
Don't paper hand it like a Nancy. Go go buy the dip on something that has long-term scarcity of value. Maybe that's the S&P 500 index.
Right.
Because 50 years from now or 30 years from now, I'm willing to bet on the value of American companies being greater than it is today. S&P 500 is probably not a bad investment then,
Yeah.
especially if you have the ability to get into that. The beauty of real estate, though, is you don't even have to have the money. You just
Yeah.
have to have the money for the down payment
Yeah. And credit.
and credit. That's right.
That's it.
And
And then you're leveraging future money. You're
yeah,
leveraging like you're not even like using you're not even using the money you have yet. And
yeah,
so everybody that I find that has money, what they did, like with the last recession, when we had a recession, was when everybody was telling you to buy, or when everybody was telling you to sell, they were buying.
yeah.
And you know what? When the recession hit, they bought properties. They come
They
out,
bought the dip.
they bought the dip, and when they tell you to sell, that's when they're buying, and when they buy,
Yeah.
that's when they're selling. So that's typically what I see historically. So I think you buy through this. I've had people I was telling a couple years ago, we were telling them, hey, you're paying too high a couple years ago. Now they
Oh,
look like
yeah.
geniuses, right?
Yeah.
So
Yeah, I mean, you
absolutely.
were telling us about your buyer who's every year, looked and said, "Oh, prices are too high," or "I'll wait till next year till they come down. I'll wait till." And the reality is that the treadmill of life has already, or, the moving walkway has already gotten so far down the street that now you have to run to catch up.
Yeah. And just
And
think of the blessing. Like I know the person in my, literally, and I want to paraphrase this so that the people didn't know if they haven't.
yeah,
This will be a good reason for you guys to go check out our last or some of our other podcasts. I just told a story about a client that I met with 5 years ago. I was going to build her a 5-bedroom house, and she had a certain budget. And now every year she calls me, and that bedroom is going down from a new house to now she's in like a 3-bedroom. And now I don't even know if I could, within her budget, if I
yeah.
could even find her something. So that stand still, the ability, like the inability to move forward, even though when people are telling you, look, this is what's happening, that's really getting people.
So what are so that's is kind of a great question or philosophical thing that maybe if there's a listener who's struggling to get off the fence, what are they scared of? Because I think that fear is what's gripping the person from moving forward, right? And it's that fear of overpaying or that fear, and I notice myself even make this foolish mistake, right? Like, Bitcoin was $63,000 a few weeks ago, and it fell to $30,000, and then it was, it's been, I think today the high was 42,000, right? And so it was a few weeks ago where I would have loved to have the opportunity to buy a 40,000 or a $36,000 Bitcoin, and yet my mind still says, well, I don't know. I'm not convinced that the bottom is in yet. I think we might actually still go down. So I'm going to sit here on the sidelines and wait to buy the next dip, maybe a little further down before I get in. And so I know that fear is what holds the listener back who's not pulling the trigger on buying real estate right now. Or I know it's what holds the idiot podcast guy back from not buying the dip yesterday even more than I did. What do you think holds someone back from buying real estate right now?
Lack of clarity.
Okay.
So they don't have the benefit of seeing how the skyrocket of real estate over time. It's really easy for me because we've living it, right? So when
Yeah.
people they just plug in, that's their one blip. That's their one moment in time that they've seen this. So you got to go back. I told this story about a gentleman. You always have the guy where I have a client that's looking to buy a home. Sorry, I have a client that's looking to buy a home.
You're popular, man.
No, I got a listing. I got a listing, and I try to turn off
I
showing
try not
time.
to. I try actually to have people not call me at all. That's my goal.
I'm sorry. I had a
No, you're good.
listing and I got showings, and showing time keeps calling me. But anyway, I had a client. So we're out looking at homes. He brings his buddy. Y'all know the buddy, this the
Oh yeah, there you
expert that's
go.
bought a house before,
Yeah,
right?
yeah,
So he
or the
bought
parents. Yep,
or the
yeah.
parent. And so
Dad, nothing worse than a dad on a real estate showing.
he's poo-pooing
Yeah.
everything that we show. And he's like, well, I paid X for my house X amount of years ago. I said,
Yeah.
sir, why don't we do this? You sell your house for that amount to your buddy.
Yeah.
And he
Yeah.
was like, no, I'm not going to do that. I can get that. I said, exactly. That's the problem. That's the
Yeah.
problem. So, like, we have to understand that we're moving forward from that
Yeah.
perspective, but that's a comparative. That's exactly what's going on. So, you have to fight to get clarity. When I said that to him, I said, that's exactly what we're battling here. Everybody can get more for their house.
Hmm. Yeah. So, like what's in the nugget that I take out of that is like we can teach and consult and lead from a knowledge perspective all day long, right? Like I could give you data point after data point after data point, number after number after number as to why it makes sense right now. And yet the reality is if there's no emotional compellment to tie the loop and to make it
Yeah.
actually make sense, no one moves forward.
Yeah.
It wasn't until you made a really emotional, clear connection for the guy as to why the market dynamics is not historical the way it was when he bought that he finally understood that the comparative market has moved.
Yeah.
And so, the thing that I've had some luck with people, especially during COVID, when people were really concerned about what happens to if what we had about 60 or so transactions pending at the time that we went into the forced stay at home, and we oddly enough all of them closed. So of the 60 plus transactions we had, 100% of them bought or sold. And I thought that was a miracle because there were a lot of people worried, myself included, as to what the future was going to look like, given that we had never been in that stay-at-home, executive order position where, yeah, we think we're going to stay at home for 2 weeks, but we don't know if we'll all lose jobs or we'll all, have incomes stripped or there's the health component of it all. There's so many things that are unknown at that time. And what I kept driving customers back to, which was, let's say everything does go to hell. Let's say that that everything goes fully nuclear and that you're out of work and your ability to earn an income is totally wiped out for the foreseeable midterm future. Do you think you're better off as a tenant or as a homeowner? Which one would you rather be without any ability to pay your bills, as a tenant or as a homeowner?
Yeah,
And
yeah,
what we know is it takes
absolutely.
forever to be foreclosed
Yeah,
on.
yeah,
And so if you're afraid of not being able to pay the bill, it's not a good thing to do at a macro level to go out and take on more house than you should because it's a terrible strategy. However, if it's apples to apples from a monthly cost perspective, you are far more secure in home ownership than you are on the tenant side of things. Because as soon as the 10th rolls around and your money's not in the mailbox, guess who's getting a letter for eviction? The
right.
mortgage company doesn't do that. It
Yeah,
might take you 10 months or 3 years or
yeah,
longer before
yeah,
you get that same exact letter to
yeah.
vacate.
Yeah, and these banks aren't trying to. They're not trying to get in the real estate business. So like,
No.
and that's another thing that I'm hearing from other real estate agents as far as like the bubble pop. They keep talking about um, uh, foreclosures, and I keep telling them, if you guys are waiting on foreclosures,
Yeah.
it's going to be a long. You got a long time you're going to wait because that's just not happening. We're not seeing a spike in foreclosures at all.
Yeah. One thing that like is interesting though, Mike, is that what we are starting to see prices in general of consumer prices start to increase, right? Fuel is up 49%. Real estate, of course, up almost some in some markets as much as 20%. And we're seeing prices increase. And so where we may start to actually see some of this come into play and impact are markets where convention, tourism's, hospitality, restaurants. If there are areas where the biggest source of income is travel and then leisure and tourism, it would make sense that we would see those markets hit hard
Yeah,
because that's been the most contracted market. And yet the reality is that Florida has never been better, or at least in the last 15 years. And so we found that the market has adapted to whatever the market conditions are, and we've all made the best of the reality, and then move forward to adapt. And that's the takeaway for me in today's market is like the ability for all of us to adapt and to overcome into what the new market is in order to get ahead in the comparative game has exponentially improved. Like that to me is the takeaway when you think about where you are financially as a listener and where you want to go and how you want that financial security and you want the freedom to be able to do what you want with whomever you want, whenever you want. The way to do that is to adapt. And the time to adapt is now.
yeah,
If you're not already taking action, take action now.
yeah,
You Otherwise you'll stand still and take on water.
yeah.
You don't have
Get
to get it
ahead.
right.
You can
Yeah,
get
that's
ahead.
right. That's right. I didn't get it right the first time that I went out and bought real estate as an investment. It took me 3 years to sell the property. I got an incredible tuition out of that.
Hmm.
And and that launched a real estate career. I lost a lot of money yesterday in cryptocurrency. You know what I didn't lose? Education.
Hmm.
And I didn't lose the experience of going through that and now knowing that the next time that happens, when there's a 30 to 50% collapse in value, I know how I'll handle it because I've now been through that multiple times. And
And you
so
can pull from that experience.
that's right. That's right. So go take action. Take action to get ahead of the inflation, whether it's 4% in air quotes or 40%.
Yeah, it's not
Go take
4%.
action and take it by going by acquiring assets. Because in a market of inflation, assets with low interest rates that are leverageable come out way ahead.
Yeah, we're saying that from a non tax perspective. So
Yeah.
I want to give that caveat,
Correct,
non-expert.
correct. I would never. That's right. Thank you, Mike. Because I would not give investment advice because I'm not qualified to give investment advice. Thank you. So, so I certainly would not give investment advice. Thank you. So, not investment advice. Do whatever you want to do. But if you want to know what I'm doing, that's the playbook.